Alright, what's good everybody? It's Jonah coming back at you on another video. For this video I wanted to do a trade breakdown for today, February 19th. As you can see, it's almost 11 a.m. so pretty much the trading session ended. Um, the interesting part about this day is that I took a loss, and the funny part is the loss was actually an unnecessary loss because I jumped in basically with like FOMO, right? And that resulted me in taking a loss because I didn't fully follow all of um all of my steps that I'm supposed to do, right? And that happens as traders, right? We have rules in place to prevent us from taking trades that don't meet the criteria for our rules, but today I broke my rules accidentally, and because of that it results in a loss, right? So we're going to jump right in for today. So just to give you guys an update of what's been going on, right? Monday, February 17th was a bank holiday, so we wasn't behind the charts. Yesterday I was behind the charts for, February 18th, but nothing really happened. There was no trade that presented itself, and I just finished being behind the charts here today on Wednesday, February 19th. Once again, like I stated before, there was actually no setup that presented itself, but I just took a trade because I thought there was a setup, but once again, I didn't follow all of my rules, which led to me taking a loss. So the previous version of me years ago would say, oh, I did everything right. It's just the market just didn't give me this time. And I would have believed that back then. But with this strategy, I've backtested, I've seen it unfold so many times that like I know this was a case of me accidentally breaking my rules, right? So what you need to understand about this market is that no one is ever going to have a 100% win rate, right? Everyone takes losses. And there's going to be some losses that you take, which are mistakes that you make, human error, and then there's going to be other losses that you take where the market just isn't going to give you the trade, right? And that's okay, but you can still have a high win rate. You can still be a profitable trader in this industry if you still stick to your rules, right? So I just want to record this video to show you guys that I'm human as well, that I take losses as well, that I make mistakes as well, but for you to understand that it's a learning process all the time, right? That you always growing and you can learn from your mistakes to make yourself as good of a trader as possible. So beginning here on a daily time frame, as always, I like starting on daily time frame because this allows us to determine the daily bias. So on daily bias, I am now bullish. All of last week, I was essentially bearish because of this gap right here, right? If you see, well, this candle came down and broke structure here, so I was bearish, and price continued to respect this gap between this candle's low and this candle's high, right? Or the close and the open, right? You see a massive gap. Price continued to respect that up until Thursday, February 13th. So this was last week. Price broke up, it broke structure here, here, and obviously it was going towards the all-time high. So as price continued, price cleared this high and made new all-time highs. So because price made new all-time highs, I am bullish because price is going higher, right? And unless price give me a reason to change my bias to go bearish, right? Like say for example, price comes down and breaks this structure point here, I'm going to remain bullish because it could very well be possible that price came up, cleared the all-time highs, and it's probably going to fill this gap, maybe this gap, to then continue going higher. So my bias is basically bullish, which means I'm only looking for buys. And of course, the only news we have is at 2 p.m. FOMC, so nothing really to worry about for this morning session. So jumping right in, remember we're bullish on the daily bias. So now, if I use my hand and then replay button, what we first want to do, we first want to mark out 8:30. Right, I'll put a vertical line at 8:30. Why? Because 8:30 is when the quote-unquote hunt begins, where price begins, you know, generally going after liquidity. So from this 8:30 point, we want to look to the left to see was there any recent swing low that was created because we want price to dip down and take out sell side liquidity to then go up, right? To ideally take price on a buy to take price higher. So this is the 8:30 mark. To the left of it, we see a swing low right here. Now just move the candle. I mean this line here, right? So you can see it is indeed a swing low. So that will serve as our sell side liquidity, right? So even though this vertical line exists here, right, this still counts as a swing low, right? If we jump down to the 1 minute time frame, you'll see the 1 minute time frame to the left of this vertical line, you see this is the swing that's on an island by itself, and then this price move at 839 came down but didn't clear it. So basically after 930, well, we want to see this low get snagged, and then ideally after 930 want to see it essentially kind of make the low of the session before taking price higher. So we marked out our liquidity on the 15-minute time frame, right? So we have that there. So now we want to do is, well, we want to take price higher, right? Obviously, you have some buy side targets, right? You have highs like right here, right here, right here, and then up here. These are like the all-time highs. So what I'll do, well, so what I'll do is I'll essentially just put purple line right here. Basically, that would essentially be our final target. Because if we're bullish on price, we're expecting the all-time highs to get cleared again, since we're expecting price to move higher. So as you can see, clear as day, these pretty much make um, virtually equal highs or quote unquote resistance. So we know a lot of orders are up there, so that would be a legitimate target for us to take as a final take profit. But if I were to take a buy, I would put like, if I were to take partials along the way, the final target will only be like 10% of my position, right? Like it'll just be, I wouldn't expect price to go up there. Well, because bullish on daily buys, I would expect price to go up there, but I wouldn't bank on it because it doesn't have to hit that target today or tomorrow, right? Like it might take some time. So I just put that there just so you guys can see that that is the all-time highs. That's pretty much a massive liquidity pool. So the next rule that I should have followed, right, is to stay on the 5 minute time frame until we see a candle that's going in our direction. Like after liquidity's been grabbed, right? After sell side liquidity has been taken, we want to see a large bullish candle on the 5 minute time frame because we want price to show us that it wants to move with momentum in the direction that we want to trade it. So that is the rule that I broke. Why? You guys are going to see right now. So I will wait till 8:30 and then boom, right here. So this is where I took the trade, and this is the issue, that the mistake that I made, right? Here you can see this is the 925 to 930 candle, nothing happened. Here, this is the 930 to 935 candle. So you can see here the sell side liquidity was taken. So here, right? Sell side liquidity was taken. And do you see a bullish candle? No. Right? Do you see a bullish candle here? No. But the problem, the mistake that I did was that once I seen the liquidity get taken, I was just monitoring these smaller time frames just to see if there would be a setup, right? And as I kept shrinking down to other time frames, right, I started seeing fair value gaps. So in this case, right, on the 2 minute time frame, I did not take this fair value gap. Why? Because liquidity was taken, that's good. Then we started, and then we saw an aggressive push up. That's good, another sign. But the third candle that formed the gap was a bearish candle, and that does not fit the confirmation, right? The confirmation is that after liquidity gets taken, the two candles is the candle that created the fair value gap and the following candle that left the gap open. You want those two candles to be in alignment with the direction that you want to take price. So you want this candle to be bullish, which it is, and this next candle should have been bullish, should have been gold, but it wasn't. So because of that, this would not fit my criteria. But then I jumped down to the 1 minute time frame and I saw, liquidity get taken. Then you see a bullish rally up, and these right here are equal highs, so I didn't really count this. But then I saw, this high here and this high here, and these two highs, even though it barely got cleared, right? You can see that it technically did with like the wick of this, right? You can see it technically got cleared with this candle, and then the fair value gap here doesn't count, but this fair value gap, right, was legitimate because you have these two candles here are both bullish. So I jumped in the trade here because all of my confirmations were met on the 1 minute time frame. This looked like a legitimate entry that price wanted to go up. I don't really like how price reacted here, which makes sense, right? Because why? We go on the 5 minute time frame. Do we see movement? No, we're seeing bearish candle get formed. You're seeing a bearish candle literally get formed. Like price came up, wicked it, but it's a bearish candle. So that means the momentum is still on the downside, right? So that's the power of using the higher time frame, in this case the 5 minute time frame, because if price truly wanted to blast up and start moving up, you would start seeing aggressive bullish movement, aggressive like price pushing higher. But because a bearish candle is forming, that means there's still significantly more bearish pressure than bullish pressure. Well, I don't want to say bulls and bears, because the market, everything about this market is rigged. It's 100% manipulated. So in this case, right, the next confirmation I would need is a strong 5 minute candle in the direction that I want to take price. But clearly you can see obviously that it's a bearish candle. So I basically broke my rule because I got greedy, and it was basically FOMO. I was looking at price unfolding like this and I didn't want to miss out on the move. So put along here, stop loss here, and then my take profit was all the way, my final take profit was all the way up here by the all-time highs. And then as I was looking through for like different targets to take higher, this would have been like this high right here would have been a partial, would have took off 20-25% of the position. Then obviously you had a fair value gap here, which would have been a partial, right? A high right here, another high right here, right? Obviously you can see another fair value fair value gap, right? And then you got more highs and highs. So you get the idea, right? This was the idea that I had to take price higher because we're bullish on a daily. That's my daily bias, right? And price broke structure to the upside. But the problem is, which it's a reason why it's my rule, that the problem is that I need to wait until a 5 minute candle closes and forms that has momentum and energy in the direction that I want to take price. So because of this, right, as you guys will eventually see, I hovered in, draw down, and then boom, price takes me out, right, my stop loss. So no reason to get mad, and the reason why there shouldn't be any reason for you to get mad or frustrated is because one, you have a stop loss in place, right? The stop loss is to protect you from making your loss bigger, right? It literally stops your loss, so it helps you remain in the game. So your stop loss is actually a good thing. So stop loss took me out because chances are if your stop loss gets hit, either price wasn't planning on going in your direction or you were just wrong, right? Those are pretty much, or the market just didn't want to give you the trade. In this case, I was just wrong. Why? Because I didn't follow my rules. All right, and if I go into the 5 minute time frame, you're seeing that it was just bearishness. Then, right after I took the loss, I mean, there was never really actually a setup, right? So I'll just show you guys, right? So we see on the 5 minute, now we have like a bullish candle. So then from the 5 minute, I start dropping down. 4 minute, right? We don't see anything. 3 minute, nothing. No fair value guys, no nothing. 2 minute, right? Still, still nothing. And then on the 1 minute time frame, right? There's no gaps. There's nothing, right? So this 5 minute candle, we seen it, but nothing happened. And then, right, we'll just continue going through these candles. Right, you're just seeing a lot of bearishness. So here we have another bullet candle, but it's like a weak candle, but even then I still drop down to see if there's anything, right? And as I'm dropping down, we're not seeing any fair value gaps. We're not seeing any structure breaks, nothing, right? The structure break, well, the last structure is right here. But as you can see, price is slowly creeping up and it didn't leave any gaps. So we go right back to the 5 minute time frame. We continue to let price play out another candle, right? So then we keep dropping lower. We see you know, what is happening on the lower time frame, right? We're still not seeing anything, right? There's no breaks of structure, no nothing. Here you can see structure was broken, but the problem with this is price was slowly creeping its way up and it did leave a gap in price. But remember guys, what was the rule? That the fair value gap needed to have both the candle that formed the gap and then the candle that followed. It needs to be the same color, right? It needs to move in the same direction. In this case, have bullish candle, but this was a bearish candle right here. So I would completely disregard this fair value gap. So there's still not a trade, right? And then as you can see, another bearish candle, then bullish. And now when stuff like this starts happening, guys, sometimes this could lead to a trade on a higher time frame, like on this 5 minute time frame, but oftentimes it doesn't, because in this case, if price on the 5 minute time frame, the nearest structure break would be at this level right here. And if price came up to break structure, chances are it might also close this gap, and it might also, clear out other targets, which then it would no longer be a desirable entry. But here we have another bullish candle, right? Jumped on a 4 minute time frame. Ready, you can see 4 minute time frame, the gap is already closing, plus right there's a bearish candle, so we wouldn't even consider that. There's no gap on the 3 minute, 2 minute, no gap, 1 minute, nothing, right? So basically, long story short, price continues pushing higher, higher, and then here we are, in present moment, right? You can see price is obviously still moving, and in this case, right, price did come up and like take out this high. So once again, because I am bullish on daily buys, like that's my daily buys right now, I'm bullish on price. I'm expecting price to eventually make its way up. Now, obviously, there's no guarantee that that will happen, and that there's no guarantee that it'll happen, or no guarantee that if it does happen that it was going to happen today, right? Obviously, we have the news at 2 p.m. today, the FOMC minutes, so that could be the rally that price needs to push higher. But as you can see, right, price came down, cleared some liquidity, and then started making its way up, and now it appears to be moving up. So it seems as though our bias was correct, and of course I believe the bias is correct, and price is making its way up. So clearly, right, if we were to somehow get in the trade, if price gave us an opportunity somewhere down here, which is the actual low, then it would have been cool to be, riding the wave of price towards the upside. So we got our bias right, and this is what you guys need to realize. It's like determining the bias is 80% of the work, because once you have a sense of the direction that price wants to head to, the rest is a lot easier. You just have to be patient for price to deliver you the setup, if it does deliver you the setup. Now, in this case, once again, I took a trade and I took a loss. Why? Because I jumped in on a trade um, in this candle here, this long wick. I jumped in a position to take a buy, but as you could clearly see on the 5 minute time frame, it is bearish. So if I had just waited for this candle to close before I jumped into the smaller time frames, I wouldn't have even considered trade, because there's no bullish candle that formed here. So the only times I would have looked for an opportunity would have been once I seen this candle here, which of course, as we guys went through, you didn't see anything. And then obviously like these candles down here. But once price started like moving away from like the low, that's when price becomes less desirable to take an entry, because you want to take price, like you essentially want to try to enter somewhere at the low before price clears out any target, so that when you do enter, price can rally up and begin, you know, clearing all of these targets on the way ups, right? Because if targets get cleared before you get tripped into the trade, then it's less probable that price would want to head in that direction that you anticipated. So hopefully this video is a learning lesson for you guys to help you understand my strategy, how I do things, right? My strategy, I basically operate with the understanding and the expectation that price is rigged, the market is rigged, is 100% controlled, it is 100% manipulated. Every fraction of movement, right? Every pip, every pipette is already predetermined. So basically, when you're watching price, you're essentially watching a play. You're watching a performance that continuously repeats over and over and over. And it's your job to understand what that performance is, and then be able to spot the repetition in it. So in this case, because of FOMO, because of greed, and me not fully being locked in and paying attention, I jumped in on the lower time frame because all liquidity get taken. I just wanted to look at the lower time frames to see what was going on, which was my mistake. I shouldn't even have entertained that. I should have just stayed on the 5 minute time frame until price gave me any sort of signal of a bullish candle with momentum, and then dropped into the lower time frame to see if there is anything. But if there isn't, which I clearly showed you guys and explained why there isn't anything, if you were behind the charts, at least with, my strategy that I trade with, if you were behind the charts on this day, this would have been a non-trading day. So the past couple days, at least like for example, Monday it was a bank holiday, so I wasn't buying the charts. So these 2 days, at least with the strategy that I'm using, wouldn't have resulted in any trades. And like, um, I took one trade last week. Like I took a trade, I think on Monday. It was like a super minor trade, but I moved my stop loss a little too soon, so I basically got out at break even. And then all these news events, these are crazy news events, so I don't even trade it. And then on Friday, there wasn't a setup, right? Price just moved in the direction without like, there literally wasn't anything. So at least right now, took a loss for the week, well for the day, right? Um, but it's okay because we learn. We make mistakes. We're human, but we learn, and that's what's most important. So that when we are behind the charts, that we're locked in, we're focused, and we understand that obviously a lapse of focus or judgment could result in taking a loss. So that's why you want to be fully paying attention behind the charts, and this is why you want to have a strategy with a set of rules that you want to follow, because following your rules is what make you successful, right? Of course, today I took an unnecessary loss because I didn't follow my rules. So this is why you have rules to begin with, to ensure that you can find some success. And if the market does not meet your criteria, if it doesn't meet the rules that you have in place, there's no reason for you to trade, right? You can just sit back, watch price unfold, and then if there's nothing there, you step away, and then you show up the next day or whenever is the next opportunity, for you, based on what the economic calendar has in store, right? Based on these events, I'm going to be behind the charts the entire week. I just wasn't here on Monday because of the holiday, but I'll be behind the charts both Thursday and Friday, so then we can see if whether an opportunity will present itself for us on Thursday and Friday. So hopefully you found value from the video. Hopefully you learned something. Um, Hopefully the strategy makes sense. Hopefully you understand why I do the things that I do and why I take a loss, because it's not, you don't want to just take a loss and say, oh, well, I just took a loss and not learn from anything. You want to continue learning and growing and understanding, right? If you understand the market and price, you then have clarity in your mind. And when you have clarity, now things begin making sense. You're every action, every step that you take, you do it for a reason. You're not just blindly doing things, right? And doing things for a reason is what will make you successful in this industry. If you enjoyed the video, do leave a like and subscribe, as I will be posting more content very soon. Like, I want to post obviously both my wins and losses, because I want this channel to showcase essentially my trading journey from where I'm at to, wherever it is that I take it. Um, and last thing I want to say is, uh, that I essentially look at both pairs side by side, right? Both NAS and S&P. Like, this is literally how I have my charts whenever I'm trading. And long story short, the reason why I focus on NAS today is just because of I took the loss on NAS, and I'm just explaining to you why this was a no trading day. It's the same idea with the S&P, right? So this line right here, oops, this should be red, right? Because it's sell side liquidity, right? So this line here, this is essentially the liquidity, right? After it got tapped into at 925, but basically we want to see it after 930 make a low. So price came down here, it made the low with the S&P, but as you can see, it wasn't really much action. This candle was like a big wick, so almost like a doji, so nothing really happened here. Then this 10-15 candle is when we start seeing some momentum. But if we drop down to lower time frames, right, 10-15, you're not really seeing no gaps. Um, right, you see a price move up, but this gap here was with the bearish candle, and plus these are equal highs, so the swing high would be up here, and then same idea here. I mean, these kind of like equal lows, but anyways, price make a little rally up. These are equal highs, so it wouldn't even count as breaking structure. And then here you have a bearish candle. So left the gap is a bearish candle, and this wouldn't even fit our confirmation anyway. So there's literally nothing for you to trade right here. Like, this is what I mean. I had S&P open, I was watching both, and even then, like, there's still absolutely nothing for you to trade following my rules and my strategy, you wouldn't even have jumped in a trade for S&P either. But S&P, we were bullish as well, and look what happened, right? Price came down, snagged the liquidity right here, and then what happens? Price push up, it comes in, closes the gap, and then it's pushing up again, and it's clearing a high here, high here, high here, filling up the gap. So our bias appears to have been correct because we're seeing price move in the direction we anticipated. We just needed to get the entry right, and there was no entry today for either pair. So like a loss, but you live and you learn, right? And we're gonna be better the next day and moving forward. So this is the journey of being, a profitable trader, consistent trader, a successful trader, and this is what it looks like. A lot of trial and error to figure things out, and then just, you need to be locked in and bring out the best self for you to really succeed in the industry and take it as far as you want. So even though we took a monetary loss today, I wouldn't actually consider this a loss because we've learned from this day. It was a very valuable day, and had we not made that mistake, of course, we would still have our account the way it is, right? And that's what you need to understand. Priority number one when it comes to trading is to protect your account, protect the balance in your account. Then priority number two is to then make money and profit, right? So understanding your rules, and if I had followed my rules to the T, I wouldn't have taken the trade and it would have prevented a loss. So that is what's required to be a profitable and successful trader in this industry. If you enjoyed the video, do leave a like and subscribe as I will be posting more content whenever I feel that there's, a win, a loss, or whenever there's like an important day to talk about, like a recap for the charts. I'll do that for you guys. So all your support is greatly appreciated. Once again, guys, it's Joel, and I'm out. See you guys in the next video.